What's happening, people? Welcome back. Again, this video's late. This is beginning to be a running theme on this channel, but I just can't believe how busy things are at this minute. Even taking, the little half hour to record this video, and then, editing, it takes time. It's just been a bit much, but better late than never. Anyway, in this video, I'll be recapping all the dividends I received in the month of July. I believe it was 16 in total. So yeah, let's not waste no time. Let's roll the credits. Before I jump into the list of companies I got paid from in July, can I please ask that you hit the like button? It does wonders for the growth of this channel. Also the subscribe button if you want to join me. And if you haven't found a platform to invest on yet, I've left some links down below. Trading 212 is my personal favorite. If you join using my referral link, then we should both receive a free share. I believe it's the same on Freetrade and the other links I've left, but yeah, I think head and shoulders better than the rest is Trading 212 in my opinion. Right, so working my way down the list alphabetically. First of all, we've got AG&C. I own 268.3 shares, and for those they paid me £21.39. Next up was Altria. For my 19.7 shares, I got paid £12.85. Followed by B&G Foods. I've only got 10 shares, and for those they paid me £1.26. Followed by Blue Owl Capital. They're one of my favorite BDCs. I like them because on top of your 4 quarterly payments, they quite often throw in special dividends, so they're quite nice to receive. For my 20 shares, I got paid £4.85. Next up is Coca-Cola, and for those that's new to the channel, anytime me or my girlfriend go to Costa Coffee, which is owned by Coca-Cola, we buy 0.1 of a share. So over time, it just adds up. Also, the dog used to love drinking their puppuccinos, but sadly she's passed away now. But yeah, so rest in peace to Mildred von Woofington. And for my 17.6 shares of Coca-Cola, I got paid £5.73. Next up, Global Net Lease. I own 11 shares, and for those I got paid £1.98. GSK, one of the biggest stocks on the London Stock Exchange, the FTSE 100. I really do need to add to this position, but I've just got no urge or excitement to do so. There's other companies that just draw my interest more, but it's just one of those stable companies you want in your portfolio, or I feel so anyway, so I will be adding to it. I own 11 shares, and for those I got paid £1.65. Next is Horizon Technology. I've got that in a pie with Prospect Capital. I just put £50 in it, 25 goes into each, and it does what it does. I don't really track it too well, I just leave it to bubble in the background. Anyway, for my 38.6 shares, I got paid £2.78. Right, next is IIPR. It's one of my slightly riskier plays, but you gotta have a bit of risk in your portfolio. High risk comes high reward. Just don't put in more than you're prepared to lose. With the US relaxing certain laws regarding, Mary Jane out in America, IIPR is a company that will do very well when certain things become fully recreational in all states. And this is my play in that sector. Anyway, I own 8 shares, and for those I got paid £9.96. Next, probably my favorite stock in my portfolio right now, which is Main Street Capital. It's a monthly payer, which I love, and on top of that, in old videos I was saying you get 3 special payments. It's actually 4, I miscounted. So, what's that? 16 payments you're going to receive from this company per year. That's amazing to me. And no, you shouldn't buy a company just for how often it pays out, but everyone's different, and it depends how you structure your portfolio. If you're building yours for monthly income throughout the years, then yes, you are going to want some monthly dividend payers in there. But hey, I am not a financial advisor, and more importantly, I'm not your financial advisor. But there's more than just the dividend frequency when it comes to this stock. You do get some good share price appreciation, so it's definitely one of my favorites, if not my main favorite right now. And anyway, for my 13 shares, I got paid £2.09. Next is another risky stock for me, and that is Medical Properties Trust. It is a seriously beaten down REIT, but I believe it's hit the bottom and it's on its way back up. So The dividend they did cut, but what they cut it to, I don't mind receiving that, so that wasn't a problem for me. But also with it bottoming out and on the way back up, you're getting some good share price appreciation. I think I'm about 20, if not 30% back up on my original investment. Once it hits 50, it may even double, I don't know. But if it hits 50%, I may sell stock and put it into something a bit more stable. But for now, I'm happy just to ride this one out and receive a good dividend on the way. Anyway, for my 133.5 shares, I got paid £13.29. Next up is National Grid, a company which I wish and I should have had more shares in quite a while ago when I was receiving free shares from 212 for, referring people. They was often giving me shares in National Grid, which at the time I just sold and put it into what I wanted to buy at the time, which was actually stupid penny stock. So yeah, that was a big L for me. But I believe National Grid had their hand out the other day asking customers to buy more shares and whatnot, and I wish I'd got them because I think it was at a reduced price. I'm not too sure actually because I got the email, but I didn't read it properly at the time and just scrolled on. But yeah, I wish I had more shares in National Grid. To have the AI that the world needs and wants, it's going to require a lot of power, so I believe electric companies are going to make a lot of money. Anyway, for my 5 shares, I got paid £1.96. Persimmon is a house builder here in the UK. Persimmon's a company that is very linked to the state of the economy at the time. If there's a recession, no one's buying houses, so house builders ain't really needed. But then in a boom cycle, when people have disposable income and houses are needed, companies like Persimmon, Taylor Wimpey, Redrow, there's a few others, they will all do well. So, depending on your risk level, I guess you could buy when you're in a recession and just ride it out, knowing that things will eventually come around full circle and you should make a good return on your investment. By saying that, I haven't bought much shares at all, and I don't really know why. I don't really have a reason, but I do like Persimmon. I own 5 shares, and for those I got paid £2. Prospect Capital, like I said earlier, it's in a pie with Horizon Tech. I own 75.5 shares, and for those I got paid £2.96. Next is Severn Trent. They're a utility company here in the UK. If you're like me and you're tired of being shafted by utility companies, you can't beat them, so you may as well join them and get back a little something. Anyway, for my 2 shares, I got paid £1.40. Last but definitely not least, one of my favourite stocks, I believe they're the biggest REIT in the US, and that's Starwood Properties Trust. For my 40.6 shares, I got paid £12.77. All of those shares combined give me a grand total for the month of July of £98.92. £98.92. I'm happy with that. Just under that £100 mark, which I'm trying to hit every month next year. There are a couple of months will be an exception where I won't hit it, but that is the aim for 2025, every month to hit over £100, and close to it this month. But yeah, happy. If I was taking this money out of my account, I think I'd be using it to go towards Sky Sport F1 channel, because I'm getting pretty sick of watching the highlights on Channel 4. For sake. Anyway, before I was so rudely interrupted by some trying to sell me something, yes, like I was saying, if I was taking this money out of my account, I would put it towards getting the F1 channel, because I'm pretty sick of the bias they show towards Red Bull on there. And yes, that is something I would enjoy very much. But the dividend income I receive monthly, I don't take that out of my account. Instead, I reinvest it straight back into the portfolio. It may not necessarily be to the companies which paid me. It depends what state they're in. If they've skyrocketed in price, then I don't really want to buy more shares at the high, so I might put them into other stocks. Some I have in a pie on 212. If you have 212, you know what I'm talking about. They have a pie, and when you have a pie, companies in a pie, and you receive a dividend, that money automatically gets put straight back in there. So it works for some stocks, but it doesn't work for all. Anyway, for my favorite part of the video, let's put these numbers into the spreadsheet and see how this month has performed compared to others. Right, so £98.92. Excelente. So I'm up 117% from this time last year. You know, like I say, that is to be expected because I do add to my portfolio every month. So there isn't really a reason that I should earn less this month than I did this time last year. But all the same, still nice to see that number growing. But 98.92, when you look at it compared to the other months this year, it is kind of a middle of the road month. But yes, if you look at the bottom left chart, you can see it's broken down into the 4 quarters of the year. And July is the first month of Q3, so that's why it's the figure which I just received, which is £98.92. But when you compare that to my first year of doing this dividend investing journey, I received £97.61 for 3 months, and I've made that now in 1 month. So, you know, when people say there's no point dividend investing unless you've got big money to put in, I've always said that's bollocks, because you just need to chip away at it, let that dividend snowball grow until it becomes an avalanche. So yeah, don't listen to people who chat that shit. And looking at the top right graph, you can see, like I said, it's not my best month, but it is one of the better. You know, you can see 1, 2, 3, 4, 5 big bars there this year. They are the darkest of the purples. And yeah, as long as they're all up at that height, you won't hear me complaining. So yes, onwards and upwards. Right, so that's about it for this installment. But guys, remember, not only am I not a financial advisor, I'm not your financial advisor. Do your due diligence before buying any stocks. These stocks which I own in my portfolio, I'm not bringing them here to say to you, go and buy them. There's a reason they work for me, but that very reason might be the reason they don't work for you. So always do your own due diligence before buying any stocks. I'm not here telling you to buy, hold, or sell anything. I'm literally just here sharing my journey and hoping to meet like-minded people along the way. And again, if you need a platform to start your investing journey yourself, if you don't have one, or you might have one and you just want another, because I believe it's good to have more than one. You might want to keep growth stocks in one, dividends in another, value stocks in another, or however you want to play it, that's up to you. But if you are looking for another one and you don't have Trading 212, there's a link for that down below, and a couple others, I believe. And if you don't mind, before heading out, if you could hit the like button, I'm telling you, it would really help the algorithm, which I need all the help I can get, and hit the subscribe button and join me on this journey. And don't be shy, man, chat to me in the comments. I want to hear what you guys got and whatnot, or if there's something I should be looking at, because I'm always on the lookout for new stocks, even though I shouldn't be. I own far too many as it is. But yeah, I always love hearing about new stocks, so yeah, hit me up in the comments. Anyway, next month I'll be recapping all the dividends I received in the month of August, and I believe it's going to be a better month than July, but yeah, let's wait and see. Anyway, take care guys. Te cuidan. Adios.